Happy Thursday, everyone. Welcome to Ardent Partners' monthly webinar series. Today's webinar, The Procurement Metrics That Matter in 2023, presents the world premiere findings from our latest research effort, which is part of the ongoing dialogue that Ardent Partners has had with CPOs and other procurement leaders. Our event features Ardent's Chief Research Officer and an industry expert from GEP. Today's discussion will be a lively one, so let's dive in. My name is John Yuba, Ardent's Director of Research Operations. Our agenda today includes a brief introduction, followed by our presenters diving into the procurement metrics that matter in 2023. We'll wrap things up at the end with a summary and Q&A session. Ardent Partners is a next-generation analyst firm that leverages its data-driven research to help business executives make smarter decisions and achieve better results. Ardent's clients and global community understand and appreciate that when we publish research and guide our clients, we do so based on literally thousands of data points collected and analyzed over the past 2 decades. Our unique primary research methodology, high impact research publications, and deep domain focus set Ardent apart from its competition. Our community is expansive, our influence is extensive, and our research is unrivaled. GEP is an industry leader and a trusted advisor to many Fortune 500 and Global 2000 companies. GEP helps market-leading enterprises improve performance and enhance outcomes through digital-first procurement and supply chain transformation programs. GEP is pioneering the use of artificial intelligence in procurement operations through its market-leading software, consulting, and managed services solutions. Our esteemed speaker panel has 2 leading experts. Paul Blake is a senior director and leads technology product marketing at GEP and is responsible for the promotion of the GEP software platform. He has worked in technology for over 35 years and has been involved in the development of business software solutions since before the advent of the internet. Paul ran the development team that delivered Europe's first B2B trading platform in the 1990s and implemented e-commerce networks on 3 continents in the early 2000s. Having spent the last decade at GEP, he has a long-term experience with the trends and developments in B2B software that affect the industry. Next, with 24 years in the industry and 14 years leading the charge at Ardent Partners, Andrew Bartolini is a globally recognized expert in sourcing, procurement, supply management, and accounts payable. As the Chief Research Officer at Ardent Partners, Andrew oversees all research and client programs, including the annual State of the Market and Metrics That Matter ebook series, technology advisory reports, Ardent's monthly webinar series, as well as its in-person and virtual CPO Rising summits. Andrew is also the publisher of CPORising.com. And with that, I'll hand things over to you, Andrew.
Thank you, John. Hello and good day, everybody. Sorry the little slide back and forth there. We do want to thank GEP for sponsoring, for making today's webinar possible, and thank you to Paul as well for joining me. I guess we've been doing this for 6 or 7 years now, Paul and I, to discuss the metrics that matter to procurement organizations, to CPOs, and those stakeholders that find procurement relevant. I think everybody knows, right? Businesses focus on measuring their revenues and profits because they matter, right? These numbers are critical to employees, those inside the firm. They're critical to those that are outside the firm, customers and suppliers and shareholders. And the metrics represent the final score of a game, which was played last quarter or last year. And as such, at least in the for-profit sector, these businesses are playing the game to win. And CPOs are no exception, right? There's a lot of competition to drive and excel, to match and meet performance targets. Procurement results matter, right? We've seen this, we've talked about this at length over the years at Ardent Partners. They matter to the enterprise, they matter to the bottom line, they matter to your customers, they matter to your suppliers. In 2023, procurement results are going to matter more to the enterprise, and measuring metrics help track results. Now, since 2010, Ardent has conducted more procurement-themed market research than any other firm or consultancy in the industry. We have benchmarked thousands of distinct organizations across all aspects of their operations. Our Procurement Metrics That Matter in 2023 is a compilation of the industry's best and most widely used procurement industry benchmarks, and they were captured earlier this year in our annual State of the Market report. CPO Rising 2023, CPO at the Crossroads, that published a few months ago. This ebook is publishing, and will soon be available from Ardent Partners, but it's definitely available from GEP right now. I wanted to spend a minute here to share the demographics of the data that we're presenting today. I think it's important always to have an understanding of, to get the context of what the numbers actually mean and how applicable they are. I would say more broadly that the commonality of procurement, cross industry, cross geography, and even across company size, remains. There's a great commonality, and so I would say that what we're presenting today is generally applicable. There are some distinct nuances as you get into industries, but respondents you can see coming primarily from procurement and supply chain, coming from a very senior level within the organization, right? So more than 3/4 of those that participated in our research study were at the director level or larger. The data does capture companies of all sizes, but it does tilt towards large enterprise, which we define as companies with revenues, annual revenues greater than $1 billion. And the data does reflect a global community, but does tilt towards North America and EMEA, with Northern Europe being the stronger group in EMEA there. Industry-wide, very horizontal. There's no strong representation from any distinct industry, and so that's the background. And again, really excited for the world premiere debut of these data points. And I think as we've done our research this year, one major headline, one of the major headlines is there are a couple, is and that is pervasive uncertainty, right? So CPO out of the pan into the fire, right? The perpetual state of uncertainty for procurement leaders that began with the global pandemic 3 years ago continues today, right? What we have seen is that 44 in our research, that 44%, right? So almost half of all CPOs are feeling a great deal of uncertainty about what's going to happen in 2023, and almost all express some level of uncertainty. And this is in the immediate aftermath of a pretty historically unprecedented period of time with the pandemic, right? Yes, there have been other pandemics, but in the modern age, in the modern business era, in this millennium, in a period of time where procurement is now viewed as a strategic organization, we've never seen anything like it. And so, as we looked into 2023, what are the things that are sort of front of mind? Why, what's driving this uncertainty, right? It's inflation and supplier price increases. As central banks have gone to battle inflation, right? They've increased interest rates and the cost of capital has grown. The talent wars, is something I think that the CPOs have been fighting for, probably close to a decade, particularly those that are located in major metropolitan areas. And then the ongoing supply chain disruptions, right? I mean, there's been more written about the disruptions in the supply chain over the past couple of years than in the entire history of supply chains. So pervasive uncertainty. While uncertainty heading into 2023 is the standard CPO opinion, right? So a survey was done in January and towards the end of March of this year. CPOs had mixed views about the year itself, right? Out of the hundreds of CPOs that we surveyed, 60% believe that this year will be more challenging than 2022. And 2022, relative to the decade that preceded it, was pretty challenging, right? Still dealing with, the lingering aspects of the pandemic. That appears to be, from the CPO perspective, mostly in the rear view. Almost, very small percentage of CPOs felt that the pandemic was going to play any type of role in their operations this year. But pretty challenging couple of years. A majority think that this year is going to be tougher, and it's driven more by the economic uncertainty, right? The threat of a recession. Certainly 40% are thinking, that it will be not as challenging or similar. Only 14% of those surveyed thought that this year was going to be easier. Now, as we like to proclaim each year, right, the state of procurement is strong, and it's always in a relative context that we say this. But there are still challenges ahead. There's still a lot of work to be done, right? When we dive into the metrics, the benchmark performance levels of the average or typical procurement organization, we see that there's still fantastic or large opportunities for improvement. This year, right, we asked the respondents to select their top 3 challenges to achieving their procurement department's objectives over the next 18 months. And, the answers were enlightening, right? Budgetary constraints was the leading challenge cited by 38% of CPOs this year, right? And so, inflation and the cost of capital are hitting enterprise budget holders. This is, so it's a double-edged sword in some respects, right? So managing your own budget, right, within procurement, going to be done much tighter this year. But procurement's not alone in that challenge, and there's all the other budget holders, right? The leaders of business units and different different functions within the enterprise are also facing these same constraints. And it's at this point in time where procurement can serve as a real resource to those that are struggling to manage their costs this year, right? For those leaders that you have not engaged, this is the year to do so. Now, Paul, we've covered a sort of high level, here's where we are from the CPO perspective, and I know you've got some thoughts on the ground we've just covered.
Yes, thank you, Andrew. Hi, everybody. Thank you very much for taking the time to join this session. As Andrew said earlier, we've been doing this now for a few years, and it's really interesting to see how these numbers change and adapt. But in a theme that I know we'll come back to over the course of this session, and of course a lot in the weeks, months, and years to come, I'm minded to point out that I wonder how long I will be doing this and how quickly I will be replaced by an artificial intelligence in this process. Maybe I'll be Paul GPT for this session. The reason I say that is because I was recently read a statement where somebody said most humans operate with the equivalent of AI. They take chunks of information created by others that they understand and formulate opinions of their own that they can present. And that's essentially what I'm doing here, right? So I wonder what the future has in store for people like me. But I suppose one thing that is currently still in the purview of humans, and will be for some time, is the means to look beyond just the data and perhaps infer some meaning from what is not reported as much as what is. Anyway, I think it's perfectly reasonable to presume that 44% of procurement professionals perceive a great deal of uncertainty in the near future. I suppose I wonder where the other half have been recently. On a macro scale, what were pretty predictable patterns in the past are no longer the case. Of course, there are perturbations in climate, both literally and figuratively. The societal and political certainties we once had no longer apply. It's no longer unthinkable that the worst possible person imaginable could reach the heights of political power in a democracy. I'm British, you understand. I feel that very keenly right now. And whilst I might make a joke about it, it only goes to indicate that many of the touchstones and certainties that we had about how the world operates are increasingly suspect. So uncertainty is absolutely fair. It's also reasonable to assume that we're not over the worst of it. Now, that might be wrong, but as an operating assumption, I think it's probably a good call. We hope for the best and prepare for the worst. The challenges, as represented by the hurdles we see here in this slide, are pretty severe in some cases. What I detect from these statistics, however, is that there's a wide spread of challenges. Now, money will always probably be up the top. Budget dictates everything that we can do. Andrew and I were just discussing that before this this webinar went live. But the fact that there's a fairly even and equal spread across a mix of these 6 main categories on this slide suggests, to me at least, that CPOs and their teams are feeling the pressure from multiple directions at once. And it's going to be hard to fix resourcing or technology gaps without the budget. Likewise, getting your stakeholders to engage with new contracts and new suppliers is tricky when you're pushed for resources within the procurement teams. So I think this is all very easily understood, it's very fair, but it's also extremely challenging. Andrew.
Yeah, no. So Paul, a couple comments there. So first, my view on AI is that, Paul Blake will not be replaced by AI, but Paul Blake could be replaced by someone who knows how to use AI very well. If that's Paul.
Yeah, fair enough. Fair enough.
Yeah. So I think that's where we are on the technology side. We're going to come back to that, right? So CPO at the crossroads is really looking at the report and this ebook, right? The themes that we're looking at this year, right, are related to AI, but really more related to digital transformation and the ability to become an intelligent organization through the use of procurement's big data. And AI is an obvious manifestation of that, and we'll get into that in a second. Second comment, right? So I do think that there is an overhang, that we've seen that long-standing institutions are no longer viewed as trustworthy as they once were, and that it's not a general societal unraveling per se, but there are trends that we have grown accustomed to over the past 25 years of working and just that we've experienced in life that are trending now the other way. And so we'll dive into some of those too. But there are some bigger picture issues that need to be addressed in the immediate term. Some of the things here that we see are the classic challenges, right? Difficulty engaging stakeholders. Is that more problematic now that we're no longer co-located all the time with those stakeholders? Probably. The classic challenges of aligning processes and systems and gaps in technology continue. But supply risk has been something that Ardent had identified sort of pre-pandemic, that there had been a shift in sort of the trends that have driven globalization over the past 25 odd years. There's heightened geopolitical tensions. There's a global conflict today. There's a move away from global free trade, right? And part of this is east-west tensions. But supply management is a science of uncertainty, and it's an art of probability. In today's complex business environment, procurement executives are tasked with managing an ever-increasing array of risks. Procurement pros are responsible for sourcing materials, services, and goods from suppliers that are now located all around the world. These suppliers are often located in areas that are vulnerable to geopolitical instability or to climate change and other disruptions, right? As we've read, anybody reading the headlines, right? So those of you working in procurement, right, this is front and center. But for members of my family, as they saw all of the supply disruptions and shortages, they started to have a much better understanding of what supply management is, what procurement is, and what I've been focused on for the majority of my professional career. The general level of uncertainty that exists among the CPO contingent reflects a series of high and medium level risks that are facing procurement this year. They're not all new, but the severity and sort of the potential impact of them has grown increasingly large. Inflation and supplier price increases, and we're going to dive into look into each of those in a second, right? And then, as I mentioned, geopolitical issues, supply assurance, and production constraints, are also identified as high to medium risks. And what I want to do now is just sort of walk you through over the next couple of pages, the top 5 risks facing procurement, based upon the research. So this is what the CPOs perceived as the top risks heading into this year, and we did so using a weighted average, right? So the high and medium and low and no being the categories that they asked. So top risk facing procurement this year, right, is inflation and the ongoing battle of supplier price increases. While inflation has slowed in the United States, the same cannot be true for other parts of the world, right? Inflation continues to rise rapidly in many other parts. I think, though, right, it's important to understand that a large component of the overall price increases experienced over the last 2 years have been driven by corporations seeking greater profits rather than pure economic inflation, right? In some industries, profits are reaching historical highs, which means there are and will continue to be opportunities for sourcing teams to push back and negotiate better pricing, right? It's a difficult sourcing environment because of the challenges that we've seen with supply assurance, right? And so when your incumbent suppliers are rolling out price increases, it becomes difficult to think about now is the right time to move away from that trusted incumbent. The main challenge that I think, because there is true inflation here, but there are also suppliers that are taking advantage of it, is that, for the past 20-25 years, sourcing, category, and buying, procurement professionals more broadly have been trained by their suppliers that they're going to get the next version of the product that will have new innovations and be of higher quality, and be able to get that next version at a lower price. And so, many of these trends are now going the other way, and suppliers are taking advantage of their ability to increase prices. So in this, it makes it for a pretty difficult sourcing environment. Now, top risk number 2, right? So not one that's always, near the top of the list, but budget pressure. It's a major concern for CPOs in 2023. It was also last year, to be fair. Tighter budgets limit the resources available to procurement teams, makes it difficult to meet the needs of the business and maintain quality standards across the full operation. What we've seen is that utilizing non-employee talent, right? So consultants, independent contractors, non-full-time employees in both a tactical and a strategic way is something that more CPOs are doing, and we think it's going to become part of a more regular CPO strategy. Our research with one of our other sites, the Future of Work Exchange, what we found is that 49% of the average enterprise's total workforce is comprised of external non-employee talent, right? So, this has been a long-standing trend, and something that if organizations are, have a lot of open job requisitions and haven't been able to fill them, you need to think of alternative strategies on how you're going to be able to get the work done that needs to be done. Top risk number 3. Now, again, the survey was done beginning of the year. And it has felt that, like, for the past 12 or 18 months, we've always been 1 month away from the coming recession. And as we go sort of deeper into this year, a deep recession feels unlikely. But market volatility such that it is doesn't mean that it's completely off the table, right? We've seen some pretty dramatic swings up and down. It's unclear if global monetary policies are going to be able to thread the needle and push back inflation while avoiding a recession. What is clear is that CFOs and others in finance have braced for tougher times with budget cuts, resulting in reduced resources for procurement teams this year. Right, 64% identified recession is either a high or medium risk of 2023. Bigger picture, right? Supply chain disruptions due to geopolitics, right? Now, in our chart, we had other causes to the supply chain disruptions, but geopolitics, identified by almost 60% is something right at the top, right? Because over the last few years, we've experienced these, right? Today's global business environment is fraught with geopolitical risk and uncertainty that has been snowballing for many years, right? Europe is grappling with a war, and leaders in Russia and China are in many ways defying the post-Cold War order and aggressively challenging many Western values. Right, the West declared economic war on Russia. East-West tensions are spiking, and this is a new economic era, and one that poses new and sizable challenges for procurement leaders in 2023. And this is the second crossroads that we're going to come back to, right? So remember this one here. But the geopolitical environment that we've experienced, in the early part, the last part of the 90s and into the new millennium, things are changing and changing at a pretty rapid pace. Top risk number 5, right? Supply assurance. Ensuring a reliable supply chain is critical to meeting business needs and maintaining operations. However, the preponderance of supply chain disruptions makes it challenging to push back against, as I was just talking about, it's difficult to push back against incumbent supplier price increases and surcharges when you don't know the reliability of these other sources of supply. So Paul looked at risk broadly, and then more specifically, how are you thinking about the environment today?
Well, this is important stuff. Understanding risk at every point in the chain has to be a primary mission for procurement and supply chain operations. If not today, then definitely by the end of next week. It's really important. The advances in technology that we're seeing right now mean that many of the transactional and operational processes of procurement will become accelerated to the point of really taking no appreciable time. What then for the people that we have who are currently doing that work? Well, I think, in my opinion, is that risk is where it's at. Not only are a deep understanding of risks and the skills to mitigate them going to be a real competitive edge going forward, it is something that procurement teams need to major on without delay, because it's also one part of the operation where human expertise is currently the only means at our disposal to make a difference. Thus, a focus on risk, the causes of risk, avoidance, mitigation, is going to be both primarily important and the part of the process where we can make a difference. The measure of success will be the speed and agility with which we can adjust our operations in response to risks becoming real disruptions. So avoiding impacts will not always be possible, but how we respond will determine how severe those impacts are. And as we see in this report, inflation is overwhelmingly the most widely recognized risk. And as you pointed out, Andrew, there is still potential out there for inflation busting deals to be done in many sectors. But what that does not mean is that those opportunities will necessarily be easy to identify and easy to win. It will come down to how we deploy our people to be creative and hunt down the value that's out there in the market. A couple of weeks ago, I happened to be visiting a customer of ours who's a global innovator in high tech. And they told me that 3 to 4 years after first deploying our software, as it happens, they've reached a point where over 95% of their purchases are 100% compliant, meaning that they require absolutely no oversight or intervention from the procurement team, and that over 40% of their processes are now fully automated. What that means in real terms is that their procurement team have completely changed the work that they're actually doing. In just a few short years, what they're doing now is working on risk, managing supplier relationships, creating new opportunities. And what they're not doing is administering much of the processes and the transactions and documents. So with budget pressure being also such a widely held risk, a widely recognized risk, that redistribution of human capital can be incredibly useful. Being able to achieve more and more strategic outcomes with the resources you already have is obviously the ideal response to a budget squeeze, and something to be focused on in times of recession and recruitment challenges. The geopolitical risks you pointed out, I think, perfectly highlight this need for agility and responsiveness. We've seen over the past 6 or 7 years that the legacy processes and systems that governed our operations in the past cannot deal with the seismic impacts of pandemic, natural disasters, conflicts, and the unpredictability of extreme political shifts in the different global economies. When the systems are hardwired for a world that doesn't work that way anymore, then it's going to be extremely hard for the people to get to grips with the risks as they arise. We have to recognize that uncertainty and unpredictability are now part of the fabric. So what we need to do is to build our processes and systems on a model that enables flexibility and change as needed. This final risk factor of supply assurance is an indicator, I think, of what happens when this flexibility is lacking. In the actual wording of the Metrics That Matter report, it says the preponderance of supply chain disruptions makes it challenging to push back against incumbent supplier price increases and surcharges. I would contend that this is exacerbated and in some instances caused by the fact that the ERP or whatever system it is doesn't allow you to suddenly switch tracks or suddenly change how you're working. The ERP certainly doesn't help in that regard. So these risks are real. They have very real impacts, but I believe they can be managed, they can be measured certainly, and they can be mitigated with the right combination of human skills and some kind of technology that allows more flexibility than we've had hitherto.
Yeah, no, I mean, I think that's exactly right. I mean, you, I think you guys were at the first CPO Rising Summit back in 2016, right? And the theme there was agility. And, at the time, right? I mean, the reality is that many of the supply chain risks were already in existence, but, the markets were still going in a more positive way. Agility and flexibility and visibility, I think, become the real answers here, because the markets are going to shift, and some things may ebb and flow. There may be new leadership in China or the U.S. that takes a different tack and de-escalates the East-West tensions. But for procurement organizations today, you just have to be much more flexible, and the flexibility has to be matched with visibility, because I think that there are a lot of procurement organizations that have inherited risks that they're simply not aware of, right? It may be one thing if you understand that, a strategic supplier is based in Taiwan, and, the potential ramifications if something were to change in, China's approach to Taiwan. That's something that you can understand, and you're taking that risk, and it's a known risk. But there are so many other instances of either sort of first tier suppliers or second or third tier suppliers that you don't have really great visibility into their operations, into what it is that they're doing, where it is that they're doing, and how they're doing it, and that becomes a potential for serious consequence, right? So, but just to, I would underline exactly what Paul was saying there: need for agility, some way to be able to scale operations through automation, and I just would say, and visibility as a byproduct of those becomes very equally important. But again, huge challenges for sourcing pros, but big opportunities here as well to be heroes. Now, let's pivot. Savings. Savings tops the CPO's agenda, right? This, I think, is headline number 2 from our research this year, right? So if I go back to 2010, right? So I've been doing market research in the procurement space for almost 20 years. But if you were to go back 13, 14 years, in the midst of the Great Recession, 9 out of 10 CPOs had prioritized savings over everything else. And then in each ensuing year, the percentage of CPOs focused on savings decreased, often by significant numbers, as the economy recovered. There's a broad economic expansion that went on for years. And in that positive market environment, when everything is going up and to the right, the bottom line savings are less important than quality or growth or other factors that procurement can bring to bear. Last year, in no small part due to inflation and the pressure that many businesses feel to defend their profit margins, the percentage of CPOs who prioritize savings from 2021 to 2022 doubled, and it increased again by 50%, making it the top priority for 46% of CPOs this year. Sourcing professionals, right? We've talked about this, right? It has been, it's been a great time to be a sourcing pro, right? You're able to go back to your incumbent supplier, get a decrease and a better product and a better offering, all in the same, in that next contract cycle. I don't think that's going to be the case, at least in the near term, right? And then you have the sort of the overhang of the cost of capital, right? So interest rates increase, have very direct impact on the way that procurement manages its supply, where the supply is coming from, and the things that, operating in almost no cost or extremely low cost credit environment, as we have for, maybe 15 years now, is not something that's going to swing back, immediately. And, as we have often thought, our hypothesis was that when things are great, savings less important. Let's see what happens when things start to get a little bit tougher. Will companies revert back to sort of their core essence, right? Is finance going to be laser focused on the bottom line? And does that put, pressure on procurement to deliver more savings? And we're seeing absolutely that it has. So speaking of savings, right, we're going to walk you through some of the metrics that matter, the metrics we think the procurement organization should measure and be focused on. First of those, right, is the top the top metric that CPOs use to track their own performance, and the top metric used by the rest of the enterprise to track performance, and that's savings, right? It's there's a lot of challenges to the metric. It's not, the best, or certainly shouldn't be the single way that an organization should be evaluated, because there are many other things that impact savings, right? So, perfect example here are the numbers that we see, which are historically low numbers. When we do and have done this research over the years, we would tend to see, achieved savings and savings targets in the 7.5% to 9%, maybe even sometimes a little bit over 9% range. These numbers are down pretty significantly, and inflation and price increases are the culprit. When we look at targets versus what was achieved over 2021, 2022, inflation took a big bite out of these numbers and impacted the bottom line of, many organizations. And just, something to keep in mind, right? But again, when markets are great and you're able to drive savings with, relative ease, and then the markets become challenging, right? Your procurement team, your sourcing team's actual ability to, change larger market, right? Most of you are not, large enough to drive price increases across huge categories of your supply. We are in many ways beholden to the economic, environment that we face. Benchmark spend under management. Right, so the average percentage of spend under management, has continued to sit at around mid-60s, for the past decade. And, from our perspective, and from my perspective specifically, this indicates that there's still room for improvement in terms of procurement's control over enterprise spend. We noted each year, right? So for every new dollar of spend that a procurement team brings under their management, our research has shown that that translates into savings of between 6 and 12% in the first contract cycle, and it also results in improved quality and lower risk. Sourcing, right? So a big area of focus and a more challenging area for most organizations, as we've talked about, heading into this year and continuing through this year, right? Addressable spend that's sourced increased in 2022 to 47.1%. And I should mention, right, the metrics I'm showing you here are the measures of the average procurement department, right? So for everyone who participated in the study, these are the averages. And it really does, having done, more than 100 distinct market research studies, these are pretty reflective of what's happening in the market, as reflected also by the demographics. Number here, has at times been above 50%. I think that the challenges on the supply assurance side and all the challenges we've seen with capacity constraints and the impact that that's had on revenue, that organizations are not necessarily at their most aggressive, despite the budgetary pressures, despite the impact of all the things that we've been talking about. My view is there's always room for more sourcing, right? Even in a one-to-one basis, utilizing, and by sourcing, I really do mean e-sourcing, right? A proficient centralized e-sourcing team can drive extraordinary value, even if you're not competitively sourcing or auctioning, that much, right? Just simply moving it up to a platform, allowing that information to be captured, so that when people leave the organization that have been, managing categories or managing supplier relationships or sourcing projects, that knowledge doesn't leave with that person. A number that has not been great and continues to be very disappointing from our perspective is compliance spend. This is hovered at around 2/3 for about a decade. For those of you looking to impact the bottom line, it's a relatively lighter lift if you can just simply go back and focus on compliance, right? If you have expended resources to negotiate a contract with a supplier, where the rubber hits the road is when the organization buys against that contract. This number in many ways is not satisfactory, and when savings is a top priority, it's critical to maximize this number. last number here, one that is much more positive and continues to grow in a more rapid way, up and to the right, is enabled suppliers, right? The percentage of suppliers that are able to transact electronically jumped almost 10% in 2023, right? And this is a leading indicator of digital transformations more broadly in the industry, and it's due in no small part to the increase in investment in technology during the pandemic with distributed workforces. Paul, I just covered a bunch of the key metrics that we capture each year and discuss each year. Where are you going to start?
Yeah, absolutely. Now, as you said, Andrew, we've been covering this for a few years now, and just as an aside for everybody who is listening to us talk, just as a peek behind the curtain, Andrew and I don't collude on what we're actually going to say and what our assessment is going to be of these various numbers. So I could cut this bit short and say everything you just said is what's in my notes in front of me here, but I'm not going to do that. I'm going to actually proceed as planned.
Great.
The interesting thing for me about spend under management, right, is that there seems to be a practical, if not necessarily a theoretical limit to it. That percentage, as you said, has been hovering around the mid-60s for some time. Perhaps that's something that we need to accept, except, as we'll come on to in a bit, we're going to see that best-in-class organizations do much better than that. So there isn't a limit there. The reality is that, of course, that these numbers, as you said, Andrew, these are averages. And that it tells us that some organizations must be really quite bad at getting spend under management. And my supposition, which I've already mentioned, and I will come back to again, is that to make a jump from being a regular to being best-in-class organization, you have to break your people out of the transactional and administrative processes of procurement and liberate them to be creative. And getting more spend under management is a key part of that, but it's also a key outcome of that. And when we've talked about this in previous years, I've raised a point, and I'll make it again now. There is always a mismatch between spend under management and addressable spend that is competitively sourced. And I know there's a definitional difference between the two, but if there's too big a disparity between your assessment of spend under management and competitively sourced addressable spend, then something's wrong. Simply put, if you're not sourcing addressable spend, in what meaningful way is that spend actively under management? It's what you just said, Andrew. You should be doing sourcing. Is it the fact that it's visible, make it put it under management? Well, okay, to a certain extent. Under contract, fine, but surely the definition of spend under management should be more than spend that you know about. You should be putting it to work. And so sourcing addressable spend really is at the heart of spend under management, I think. And we always see this disparity between those two numbers. And I think more organizations need to understand that sourcing is really where it's at, but perhaps they don't have the resources to do it when they're doing so much document choreography. But of course, it takes time and effort. So it's hard to get these numbers up. And this is where increasing automation and acceleration due to technology, I think, does play a key role. But what about the contract compliance spend on the previous slide? Well, that is the old procurement chestnut. Again, as you said, Andrew, when procurement is separated from the business, and when the purchasing system is separated from the sourcing system, we get this chasm between intent and realization. And this calls back to one of the hurdles at the start of this slide deck about engaging stakeholders. This is what procurement should be doing. And procurement should also be enabling suppliers to transact through the systems. To continue the transformation to that more agile and efficient model, supplier engagement has to increase. The fact that we're moving towards a data-driven model where all parties will interact as easily as we communicate these days without needing to think about technology or onboarding and whatever, is going to get us ahead of the curve. But getting ahead of the curve will not optimize the value and control that we have over what that ultimately looks like. It is important that we enable this interaction at a fundamental level between our operation and those of the supplier operations, because without that, we don't have the opportunity to close that gap between where we currently are and what a best-in-class operation looks like.
Got it. So great insights there. Yeah, and we have not collaborated on our notes, and so the Venn diagram is usually, fair. There's some good overlap. Moving on to like the CPO's priorities, right? We've really covered these, and so I'm not going to spend a lot of time here in identifying cost savings, with all of the supply risks and challenges, right? The top two priorities, and then driving digital transformation, which for the past 5 years has been the top CPO's priority, right? CPOs have accepted the fact that technology is going to be needed to scale operations and really serve as a foundation for operational excellence. Strategies also map towards the primary challenges, right? Technology remains front and center. The one I'd call out here that is new to this list is impact on cash. I think most people are aware, and we've talked about savings being the most popular or prominent metric used by CPOs to evaluate their organization's performance, overall performance. Second most prominent or popular is procurement's impact on cash, right? So lots of opportunities there, and now that the cost of capital is higher, a greater need to do so. At Ardent Partners, right, we publish a website, CPO Rising. We have been, and I've been an evangelist for the role of procurement over the past almost 25 years. I look at this data, and I guess I say the glass is half full, right? It is great that a majority of organizations can do these things, but the flip side is about half, or between 40 and 50%, are not able to do things that should be sort of basic capabilities, starting points to a move forward. Paul.
Yeah, I mean, strategies have to be aligned to the primary fiscal goals, cost reductions and savings, but overall, that strategy for transformation of the function has to be tech-centered. I mean, I'm on about to say that because of who I work for, but I actually do believe it. And don't take my word for it. I asked ChatGPT, and GPT said, technology is an enabler for business transformation. It can help businesses reduce costs and inefficiencies, boost productivity, enhance workplace experiences, improve the customer journey, and accelerate product creation, so on and so on. Well, great, so far so obvious. But instead of just reiterating this kind of generic statement about the role of technology, I think the point that is often overlooked is that procurement happens in software. As you said earlier, Andrew, it's e-sourcing. That's where it's at. That's how you're doing it. Digital transformation is no longer about starting to use software. It's about changing how you're using software. The first wave of digitalization of our processes was about replicating them in software. And the problem with that was it was from there on in difficult to introduce any change. The tools that were supposed to help accelerate value have started now to lock us in to an operating model that's no longer fit for purpose. Digital transformation now should not be about digitalizing, but about changing the parameters of what the digital aspect of our operations can do. So it should remain a strategic priority, because digital transformation was never a goal, but a process, a journey. And tech is going to dominate the conversation in the near term for sure. The latest developments in AI and automation are going to change a lot of things. Ultimately, where we are taken, who knows? And it's definitely beyond the scope of this session, but my thinking is that over the next couple of years, CPOs should not look to technology to explicitly replace human resources, but to liberate them from admin and transactional work. And that means that the skill sets that we will need will change. And they would need to focus on all of these areas that are on this slide right here to get those numbers up.
Yeah, no, that's great. That's great. And so, the ebook and today's presentation also shares all of the best-in-class performance metrics, which are, just significantly higher levels of, operation, right? So best-in-class in Ardent Partners research parlance means the top 20% of performers, right? So this is a group that manages more than 90% of their spend. Their compliance rates are significantly higher. They source more. They have enabled their suppliers. They have adopted technology to a greater degree, and they also use it with much greater volume and proficiency. And to encapsulate the best in class, right? Just tried to put together a little graphic here to really highlight what are the key characteristics of a best in class procurement department, right? The metrics sort of bear out that an investment in procurement delivers value, right? There's tremendous ROI in achieving best in class performance in procurement. Characteristics, right? You think of, and when I think of it, I think it starts at the top with strong leadership, but they have all of the things that, the glass is very full, right? From a capability standpoint, right? They have automated and, they have automated their processes. They have holistic processes that are standardized, their visibility into spend, into operations, into what their teams are doing much greater, and that their investment in people is also greater. So Paul, I know you've got a lot of, you've worked with a lot of best-in-class procurement organizations. What do you think about when you think about best-in-class procurement?
Yeah, I mean, I think that I personally believe there is a very strong correlation between those organizations who achieve these best-in-class results and their ability to take advantage of the technology that's available, and especially their handling of data, more specifically their means to convert data into intelligence. Those companies that we work with who are hitting these levels of management, spend under management and savings and so on, are typically doing so off the back of a very clear understanding of their spend base, good processes, and transparency in the end-to-end source to pay process, with sufficient agility and flexibility to permit them to change without a lot of change management, without huge effort and inertia. So I suspect a best-in-class digital model is a common factor amongst those companies who rank high in those other metrics.
Yes, for sure. And so that leaves us with a few minutes, right? Allows us to look at, a bigger picture theme of our research this year, right? I think that, the events over the last 3 years have dramatically altered the global supply chain landscape. The pandemic created unprecedented challenges for procurement professionals, but as it recedes and as businesses drive forward, CPOs find themselves at a crossroads, right? A proverbial crossroads, facing critical decisions that we at Ardent, that I personally believe will shape the future of their organizations for decades to come, right? And it's really two questions that must be answered, must be addressed, right? The first is, how and when to truly achieve a digital transformation, and the second is how and when to unravel their global supply chains. And it don't necessarily mean a full unraveling, right? So, Paul, should we talk about AI or supply chain first?
Well, I think the two are inextricably linked. We did a study recently that suggested that 65% of senior decision makers believe that AI is going to have a significant impact on human decision making within the supply chain, and a similar number have suggested that they're already thinking about integrating some kind of AI chatbot or whatever into their operations over the next 12 months. It's extraordinarily aggressive. So I think, wherever you want to start.
Yeah, so let's start on the technology side, right? So, I think it has been 5 or 6, much in the way that we've been talking about agility since 2012, or started talking about it then. We've been talking about procurement's big data and becoming an intelligent organization for 5 or 6 years at least. And I think that expanded usage and broad commercialization of AI tools have unlocked countless new possibilities for using these potent analytical engines. The point that we've made in our research this year, and the point I want to just communicate here very briefly, is that the opportunities to analyze data, right? Your own data, your operational data, your supplier data, third-party data, all of the data elements that can come into play in making procurement decisions, the ability to analyze that is going to have a transformative effect on the broader procurement profession, much in the way that digital advertising and professional sports are now entirely different animals based upon big data, right? The Moneyball concept applied to procurement. It's something that is it means that in 10 years, what Paul and I are presenting, or the AI version of Paul and myself are presenting, are going to be very different than what we're talking about today. and that now is the time for organizations to get their digital houses in order, to begin to set the foundation so that when these tools start to come in, and they're going to come in slowly, but they're already starting to come in slowly, right? They're going to start to be able to better manage a tactical task or activity or multiple. It's slowly going to build. And if you're not thinking about a broader, more definitive, holistic digital transformation that incorporates all aspects of the operation and captures the data in a way that it can be analyzed and used, that's a big mistake, and that's going to be a problem in the future. So digital transformation and AI, Paul.
Yeah, absolutely. Generative AI in particular is going to have a profound effect, I think. The first is that pretty much every process step that we're familiar with in procurement, if not all of them, is something that is right within its purview to be accelerated, and by a significant degree. Opportunity identification, supplier discovery, bid analysis, contract redlining, all of these can be radically changed through the application of generative AI. And Andrew, you and I have been discussing the advent of AI in procurement on and off for about a decade. And as is always the case with these things, I think we were both right and wrong in our predictions. I think we were right in that it would happen eventually, but certainly I was wrong in the precise form that it would take. I expected there to be more of an engineering solution, as in, you would buy some software that was going to do it for you, as in the application is where the AI would reside. But it turns out that it's an off-the-shelf plugin. That it's making all these waves, and the clever bit, of course, is how you implement it, what data you bring to bear. But it goes to show that the future is always surprising, right? But nevertheless, I think we're on the brink of quite a change in how we work. And so, yes, there's uncertainty ahead, and the AI will not cure all our ills. That much is sure. But if a CPO takes a considered approach, and I have to say, engages a partner like GEP to help, then we can ensure a transition to an AI-led solution as a successful one. But it's definitely something to be thought about right now.
Yeah. I mean, the hype of AI is certainly overhyped, but the introduction of it has raised the stakes in solving the procurement technology problem, and it really cannot be ignored. Rather, it must be attacked. And so, crossroads number one. Crossroads number two, really is the global supply chain. Right? The pandemic helped highlight and intensify the risks of a global supply chain. As countries closed their borders and factories shut down, many companies found themselves unable to source the materials and goods they needed to keep their operations running. The pandemic has also exposed the risks of relying on a small number of suppliers and the need for more resilient supply chains. So big picture, sort of simplified, right? The vast majority of procurement professionals working today inherited the supply chains that they're operating in now, right? When I was a strategic sourcing consultant, I was part of helped many organizations lift and shift large amounts of their supply to low-cost countries, to the East, to China primarily. 20 years later, right, the labor arbitrage has started to shift, and the benefits, we've talked about cost of capital and increase in holding costs. The main point I would have everyone think is that this is not a call or an argument that everything must be reshored or nearshored or brought closer to home, but simply that you cannot maintain the supply chain status quo without rigorous analysis. We think that is a major mistake and something that needs to be addressed over the near term. Right? I think that, again, both of these things have significant long-term impact. But if you're not addressing and starting to think about them today, right? It's always tough to manage today while thinking about tomorrow. These are the big issues that are facing CPOs, and why we really do think they're at the crossroads. So, Paul, final comments?
Yeah, the final comment is I totally agree. I mean, I think I will reiterate what I've already said, which is that the opportunity for the emerging technology right now is to allow you to deploy the human brains that you have at your disposal to deal with these tough issues deep in the supply chain by getting them away from the transactional and the mundane and the administration tasks. So, look for those opportunities to automate, look for those opportunities to accelerate and simplify the processes, but not as a labor-saving exercise, but as a labor freeing exercise.
Right. So we're at time, but we've got a bunch of questions. I'll just take the first one that came in. This one was from Janet, and our contact information here. Feel free to contact us. Those that did ask questions, we will come back to you directly. It says Janet says essentially, let's see, 1/3 cited missing or incomplete technology. What are some tools that can fill the gaps? Paul?
Well, I mean, it's a big question in the time that we have. I mean, our opinion, the GEP's entire position on this is that what you need is a data-centric approach. That's what our software is built on, the idea that if all of your data is in one place and all of the applications that you use are feeding on that same pool of data, you have a much greater chance of success. So where there are gaps, you could potentially actually fill them by looking at the whole problem as one, rather than thinking that some kind of piecemeal set of different technologies is the answer. That's a very, very high level response to that. I would be happy to have a longer conversation with whoever asked the question to put some more flesh on the bones.
Yep, that's Janet. You'll see it in the notes. So sure. Paul, I want to thank yourself for another great conversation. I'd like to thank your employer GEP for sponsoring today's session, and hopefully when I'm back here with your AI replacement next year, we'll be able to have another in-depth conversation. But for now, I want to thank all of you for attending. Slides will be coming out directly from Ardent Partners via a link. This recorded session will be available from GEP. They'll communicate that to you, and as well as make the ebook itself available as well. Once again, this is Andrew Bartolini, Ardent Partners. Thanks for attending today, and we will see you at our next monthly webinar. Take care, everybody.